Hi everyone, my name is Tracy Mai and I'll be presenting my final project of CIS 9467 for Professor Willer. The topic that I picked is about analyzing one of the financial statements of GoPro, which is the income statement. The purpose of income statement is to provide information about the uses of funds and the income process, revenue earned from the operation, and other income or expenses that do not relate to the earning process. GoPro is an American technology company that manufactures action camera, develops mobile applications that interact with the action camera, and video editing software. This income statement is retrieved from GoPro's website. On the Investor Relations page. If you click into the financials and filings, you will get all the historical filings and financial data to evaluate the company, and right here you will see the PDF version of the 2019 proxy statement and the 2018 annual report. When you click this, you'll get the PDF, and scroll to the bottom, you'll see the consolidated statements of operations. This will be the same data as you will see on my spreadsheet. What I use to do my analysis and to apply the software. The reason that I picked GoPro is because I'm curious about what contributed to its low stock market performance. As I've seen in the past months, its stock price maintained at the same level, but when you see it closely, you will see they had many ups and downs throughout the months. So I'm curious what event or what caused such ups and downs. And as you can see it here, this is the consolidated statements of operation from fiscal year 2016 to 2018. GoPro's revenue is primarily comprised of product revenue, which is the sales of cameras to retailers or directly to customers on the website. Its cost of revenue consists of product costs, contracts for manufacturing production, and other miscellaneous costs. To better visualize the trend, I inserted the spark lines for each income statement item. We can see the revenue dropped, but the cost of revenue increased. So the gross profit went down. As for the operating expenses, all the operating expenses are dropping, showing us a sign that less sales volume might cause the reduction of the related operating expense. And this is actually a bad sign because business do need operating expenses to run the business. I also included the financial ratios as supplements of the analysis. Profit margin, return on assets, and return on sales, they're all showing the sign of better financial performance because the negative ratio is dropping. And this is due to the net loss is getting smaller compared to the prior year. To the right, you will see a line graph of the breakdown of gross profit. Cost of revenue increased, but revenue is slightly dropped. And this trend is really similar to what we see on the spark lines. To see the changes in the proportion of operating expense, I created 3 pie charts from 2016 to 2018. The proportion of sales and marketing is getting larger and larger than the prior 2 years. We can assume that GoPro is putting more effort on promoting its products and brand awareness, while the other 2 expenses are approximately the same. This makes sense because GoPro actually launched new products in 2019. And they do need more budgets on sales and marketing to boost up their revenue and to attract potential customers. Besides analyzing the income statement, I included a component of applying software to achieve a target profit for GoPro as a forecast into the future performance if we assume certain situation. To enable the software calculation process, I split the revenue calculation into two parts. One is the revenue, part of revenue. Another one is subscription revenue. The remaining will be the other revenue. In 2018, the main products consist of Hero 7, Black and Silver, and GoPro Fusion. And from the financial statements, we know that the total camera units shipped in 2018 was 4,337,000 units. I took the average of Hero 7 and GoPro Fusion to get to the average price of $254.99, and I also calculated the average price for the new products to be $449.99. Then I multiplied the average price with the camera units shipped to get to the approximate product revenue. This product revenue will be the sum of both new products and old products. Then I take the $4.70 per month to multiply with 200,000 subscribers. For the subscription revenue, and I get the revenue of $834,000. GoPro Plus subscription is actually a service that provided to the GoPro user for them to store images and videos on a cloud service. And the remaining revenue will be other revenue. Total revenue will be the sum of the product revenue and subscription revenue and other revenue. This actually matches with the revenue on income statements. My target result is $100,000. In order to run the software, I set the variable sales to be the number of paying subscribers, quantity sold for both old products and new products. As for the constraints, I set the total operating expense to be less than the original operating expenses. I also set the yearly subscription to be more than 200,000 subscribers and set it as an integer. Thirdly, units sold for old products to be more than 4,337,000 units and also set it as an integer. Lastly, the units sold for old products to be more than, for the new products to be more than 0 units and also set it as an integer. And then I click the solve. I'll get the result like on this spreadsheet. Solver actually maintains the same operating expenses, but it increases my revenue by increasing the number of paying subscribers and quantity sold for cameras. And now my net income will be $100,000. And this is my result. Thank you all for watching this video, and I hope you all have a wonderful Christmas.